Marcus Aurelius's Crisis Playbook. In 166 AD, plague killed 30% of Marcus Aurelius' customers. Wars destroyed his supply chains, and economic collapse threatened his empire. Any normal CEO would have gone bankrupt. Instead, Marcus used this crisis to become even wealthier and stronger than before. His secret wasn't just surviving the downturn, it was using the chaos to eliminate competition and capture market share, while everyone else was panicking. Warren Buffett uses this exact strategy today. Be fearful when others are greedy, and greedy when others are fearful. Ray Dalio built Bridgewater using these principles. Jeff Bezos expanded Amazon during the 2008 recession using Marcus's playbook. By the end of this masterclass, you'll have the complete 7-step crisis strategy that turns economic disasters into wealth-building opportunities. When Marcus Aurelius faced the greatest crisis in Roman history, he didn't just survive. He transformed disaster into unprecedented opportunity. The year 166 AD marked the beginning of what historians call the perfect storm that should have destroyed the Roman Empire. But Marcus's response to this crisis became the blueprint for how great leaders turn catastrophe into competitive advantage. The Antonine Plague, named after Marcus's family dynasty, swept across the empire like a financial tsunami. This wasn't just a health crisis. It was an economic apocalypse that killed between 5 and 10% of the entire population, with some regions losing up to 30% of their people. To put this in modern terms, imagine if a crisis simultaneously wiped out 30% of your customers, 30% of your workforce, and 30% of your suppliers. Most businesses would collapse within months. But the plague was just the beginning. The Marco-Mannic Wars erupted along the northern frontier as Germanic tribes, themselves displaced by climate change and population pressure, invaded Roman territory in massive coordinated attacks. These weren't small border skirmishes. They were full-scale invasions that threatened the empire's core provinces. Roman supply chains that had operated efficiently for centuries were suddenly cut off. Trade routes that generated billions in today's money were blocked or destroyed. The military costs were staggering. Marcus had to mobilize legions from across the empire, pulling troops from profitable provinces to defend threatened frontiers. The cost of maintaining these armies, combined with the loss of tax revenue from devastated regions, created a financial crisis that forced the empire to debase its currency for the first time in generations. Inflation spiked as the silver content of Roman coins dropped from 90% to less than 70%. Political instability added another layer of crisis. With the emperor constantly away fighting wars, ambitious generals and provincial governors began to question central authority. Rumors spread that Marcus might not survive the campaigns, leading to succession crises and potential civil wars. The empire that had enjoyed unprecedented stability for over a century suddenly faced the possibility of fragmenting into competing kingdoms. But here's what most business schools don't teach you about crisis management. The same forces that destroy weak organizations create unprecedented opportunities for strong leaders who understand how to respond correctly. Marcus Aurelius didn't just survive this perfect storm. He used it to strengthen the empire and eliminate competitors who couldn't adapt to the new reality. The psychological dimension of crisis leadership is where most entrepreneurs fail catastrophically. When faced with existential threats, the human brain's default response is panic, denial, or paralysis. Neuroscience research shows that stress hormones like cortisol literally shut down the prefrontal cortex, the brain region responsible for strategic thinking and long-term planning. This is why most leaders make terrible decisions during crises, focusing on short-term survival rather than long-term opportunity. Marcus Aurelius understood something that modern psychology has only recently discovered. The leaders who thrive during crises are those who can maintain what researchers call cognitive flexibility. Under extreme pressure, this means the ability to see multiple perspectives, consider various options, and make strategic decisions based on long-term consequences rather than immediate fears. The Stoic training that Marcus had practiced since childhood gave him a massive psychological advantage during the crisis. While other leaders were paralyzed by uncertainty or driven to panic by the scale of the disaster, Marcus maintained the mental clarity that enabled him to see opportunities that others missed. His daily philosophical practice had literally rewired his brain to respond to stress with strategic thinking rather than emotional reaction. The real secret isn't what you think, though. Most people assume that crisis leadership is about making tough decisions or cutting costs aggressively, but Marcus's approach was fundamentally different. He understood that crises create temporary market inefficiencies that can be exploited by leaders who maintain long-term perspective and strategic thinking. While competitors were focused on immediate survival, Marcus was positioning the empire for post-crisis dominance. While others were cutting investments and reducing capabilities, Marcus was selectively investing in areas that would provide competitive advantages when the crisis ended. While others were destroying relationships to preserve short-term cash flow, Marcus was strengthening alliances that would pay dividends for decades. This contrarian approach to crisis management is what separates great leaders from ordinary managers. Warren Buffett's famous advice to be fearful when others are greedy and greedy when others are fearful is essentially a modern restatement of Marcus's crisis philosophy. The greatest wealth-building opportunities occur during periods of maximum uncertainty and fear, but only for leaders who can maintain strategic clarity when everyone else is panicking. The opportunity mindset that Marcus developed through Stoic philosophy enabled him to see the Antonine Plague and Marcomannic Wars not just as threats to be survived, but as competitive advantages to be exploited. While the crisis was devastating for the empire as a whole, it was even more devastating for Rome's competitors and enemies. The same plague that killed Roman citizens also killed Germanic tribesmen, Persian soldiers, and potential rivals throughout the known world. Marcus realized that the empire's superior organizational systems, financial reserves, and institutional resilience gave Rome a massive advantage during the crisis. While barbarian tribes were struggling just to survive the plague and maintain basic social order, the Roman Empire could continue to function as a coordinated entity. This meant that Rome could emerge from the crisis in a relatively stronger position than its competitors, despite the absolute losses it had suffered. The emotional regulation techniques that Marcus practiced daily enabled him to maintain the psychological equilibrium necessary for effective decision-making during chaos, while other leaders were consumed by fear, anger, or despair. Marcus could analyze situations objectively and respond strategically rather than reactively. This emotional mastery was perhaps his greatest competitive advantage during the crisis. Modern neuroscience research validates Marcus's approach to emotional regulation during stress. Studies show that leaders who practice mindfulness and philosophical reflection develop greater activity in the anterior cingulate cortex, the brain region responsible for emotional regulation and cognitive control. This increased activity correlates with better decision-making under pressure and improved ability to see opportunities during crises. Now here's where it gets really interesting, and this is the framework that will revolutionize how you handle any business crisis. Marcus developed a systematic 7-step approach to crisis management that enabled him to turn the greatest disaster in Roman history into a period of unprecedented strength and expansion. Step 1. Accept reality completely. Marcus's first response to the crisis was radical acceptance of the situation as it actually existed, not as he wished it to be or as it had been in the past. This wasn't passive resignation. It was active acknowledgement that enabled him to base decisions on accurate information rather than wishful thinking. Most leaders fail at this first step because they waste crucial time and energy denying the severity of the crisis or hoping that conditions will return to normal quickly. Marcus understood that crises represent permanent changes in the operating environment, not temporary disruptions to be waited out. This acceptance enabled him to adapt his strategies to new realities, rather than trying to preserve old approaches that no longer worked. The psychological research on crisis adaptation shows that leaders who practice radical acceptance recover faster and perform better than those who resist or deny changing conditions. Acceptance doesn't mean giving up. It means redirecting energy from fighting reality toward adapting to new circumstances. Step 2. Focus on what you control. Marcus applied the fundamental Stoic principle of distinguishing between what is within your control and what is outside your control. He couldn't control the plague, the barbarian invasions, or the economic disruption, but he could control his responses to these challenges. This focus on controllable factors enabled Marcus to channel his energy and resources toward actions that could actually influence outcomes, rather than wasting effort on factors beyond his influence. While other leaders were consumed by anxiety about external events, Marcus was systematically addressing the elements of the crisis that could be managed through intelligent action. Modern research on what psychologists call locus of control shows that leaders who focus on controllable factors during crises make better decisions, experience less stress, and achieve better outcomes than those who become fixated on external circumstances. Step 3. Preserve core assets. Marcus identified the essential elements that the empire needed to survive and thrive in the long term, then allocated resources to protect these core assets, even when it meant sacrificing less critical activities. This wasn't just about financial assets. It included human capital, institutional knowledge, strategic relationships, and competitive capabilities. The key insight was distinguishing between assets that were essential for long-term success and those that were merely convenient or profitable under normal conditions. Marcus was willing to abandon profitable but non-essential activities in order to preserve the core capabilities that would enable the empire to recover and grow after the crisis. This strategic triage approach enabled the empire to maintain its fundamental strengths while adapting to crisis conditions. Many organizations fail during crises because they try to preserve everything and end up losing the most important elements. Step 4. Eliminate non-essentials. Marcus systematically cut activities, expenses, and commitments that didn't directly serve the empire's core mission during the crisis. This wasn't just cost-cutting, it was strategic simplification that enabled the empire to focus its limited resources on the most critical priorities. The elimination process was guided by clear criteria. Does this activity contribute to immediate survival, long-term competitive advantage, or post-crisis recovery? If the answer was no, it was eliminated regardless of how profitable or popular it had been under normal conditions. This disciplined approach to resource allocation enabled the empire to maintain effectiveness even with reduced resources. Many organizations fail during crises because they try to maintain too many activities and end up doing everything poorly. Step 5. Invest in opportunities. While most leaders become completely defensive during crises, Marcus identified specific areas where strategic investments could create long-term competitive advantages. These investments were carefully chosen based on their potential to strengthen the empire's position when the crisis ended. For example, Marcus invested heavily in military technology and training during the Marcomannic Wars, developing new tactics and equipment that would give Roman legions advantages for generations. He also invested in infrastructure projects that would facilitate post-crisis economic recovery. These investments required significant resources during a time of scarcity, but they positioned the empire for accelerated growth when conditions improved. The key principle was investing in capabilities that would be valuable regardless of how the crisis evolved. These weren't speculative bets on specific outcomes, but strategic investments in fundamental strengths that would provide advantages under any future scenario. Step 6. Strengthen relationships. Marcus understood that crises test relationships and reveal who can be trusted as genuine partners versus those who are only allies during good times. He used the crisis as an opportunity to deepen relationships with reliable partners, while identifying and distancing himself from fair-weather allies. This relationship building wasn't just about personal loyalty. It was strategic alliance management that created mutual support networks capable of surviving and thriving through difficult periods. Marcus invested time and resources in helping key allies survive the crisis, knowing that these investments would create lasting bonds and reciprocal obligations. The research on social capital during crises shows that organizations with strong relationship networks recover faster and achieve better outcomes than those that try to survive independently. Crises create opportunities to build deeper, more resilient relationships that provide competitive advantages long after the immediate crisis has passed. Step 7. Prepare for recovery. From the beginning of the crisis, Marcus was planning for the eventual recovery and positioning the empire to capitalize on post-crisis opportunities. This forward-thinking approach enabled the empire to move quickly when conditions began to improve, capturing market share and competitive advantages while competitors were still focused on survival. The preparation included developing new capabilities, identifying emerging opportunities, building strategic reserves, and creating systems that could scale rapidly when growth resumed. Marcus understood that the organizations that emerge strongest from crises are those that use the crisis period to build capabilities for the next phase of growth. But there's one crucial principle that changes everything about how you approach crisis management. And this is what separates leaders who build lasting wealth from those who merely survive difficult periods. Marcus understood that crises are not interruptions to normal business. They are the times when the greatest competitive advantages are created and the most significant wealth transfers occur. The leaders who understand this principle approach crises with a fundamentally different mindset. Instead of asking, "How do we survive this?" they ask, "How do we use this crisis to become stronger than our competitors?" Instead of focusing on minimizing losses, they focus on maximizing the opportunities that crises create. This opportunity-focused approach requires a level of psychological sophistication that most leaders lack. It means maintaining long-term perspective when everyone else is focused on immediate survival. It means investing resources when conventional wisdom says to conserve everything. It means taking calculated risks when others are paralyzed by uncertainty. But the rewards for leaders who master this approach are extraordinary. The greatest fortunes in history have been built by entrepreneurs who understood how to turn crises into competitive advantages. The Roman Empire's dominance for the next 3 centuries was largely built on the strategic decisions Marcus made during the crisis of 166 to 180 AD. Here's the mistake that destroys most entrepreneurs during crises. They assume that the goal is to return to pre-crisis conditions as quickly as possible. But Marcus understood that crises create permanent changes in the competitive landscape. And the leaders who adapt most effectively to these changes gain lasting advantages over those who try to restore the status quo. The crisis period is when weak competitors are eliminated, when new market structures emerge, when customer behaviors change permanently, and when new technologies and business models gain adoption. Leaders who understand these dynamics can position themselves to benefit from the new reality, rather than trying to recreate the old one. Marcus used the Antonine Plague and Marcomannic Wars to fundamentally restructure the empire's military, economic, and administrative systems. The changes he implemented during the crisis created competitive advantages that lasted for centuries. The empire that emerged from the crisis was stronger, more efficient, and more resilient than the one that had entered it. Modern entrepreneurs can apply this same strategic approach to any business crisis. The key is understanding that crises are opportunities for fundamental improvement, not just obstacles to be overcome. The organizations that emerge strongest from crises are those that use the crisis period to eliminate weaknesses, develop new capabilities, and create competitive advantages that wouldn't have been possible under normal conditions. The advanced strategy that separates the wealthy from the poor during crises is understanding the psychology of market cycles and human behavior under stress. Marcus had studied history extensively and understood that crises follow predictable patterns, both in terms of their development and in terms of how people respond to them. This historical perspective enabled Marcus to maintain confidence and strategic clarity even during the darkest periods of the crisis. He knew that the crisis would eventually end, that recovery would follow, and that the organizations that positioned themselves correctly during the crisis would benefit disproportionately during the recovery. The psychological research on decision-making under uncertainty shows that leaders who maintain historical perspective make better strategic decisions than those who become consumed by immediate circumstances. This long-term thinking enables them to see opportunities that others miss and to make investments that pay off over time. Marcus also understood the psychological dynamics of how crises affect different types of people and organizations. He knew that some competitors would panic and make self-destructive decisions, that others would become paralyzed and fail to adapt, and that still others would focus so intensely on short-term survival that they would miss long-term opportunities. This understanding of crisis psychology enabled Marcus to predict how competitors would behave and to position the empire to benefit from their predictable mistakes. While others were making emotional decisions based on fear or desperation, Marcus was making strategic decisions based on rational analysis of how the crisis would unfold. The neuroscience research on stress and decision-making validates Marcus's approach to crisis psychology. Studies show that chronic stress impairs cognitive function, reduces creativity, and leads to short-term thinking. Leaders who can maintain psychological equilibrium during crises have significant advantages over those who become overwhelmed by stress. But the most powerful technique is still coming, and this is what enabled Marcus to not just survive the greatest crisis in Roman history, but to use it as the foundation for unprecedented expansion and wealth creation. The secret is understanding what modern researchers call anti-fragility, the ability to become stronger from stress rather than just surviving it. Nassim Taleb's concept of anti-fragility describes systems that don't just resist damage from stress and volatility, but actually improve their performance when subjected to challenges. Marcus intuitively understood this principle and designed the empire's response to the crisis to create anti-fragile characteristics. Instead of just trying to minimize the damage from the plague and wars, Marcus restructured the empire's systems to become more resilient and capable. The military reforms implemented during the Marcomannic Wars created a more professional and effective army. The administrative changes made during the crisis improved the empire's ability to respond to future challenges. The economic adaptations developed during the plague created more diversified and robust revenue streams. The key insight is that crises reveal weaknesses that were hidden during normal times. Organizations that use crises to address these weaknesses emerge stronger than they were before the crisis began. This requires a level of strategic thinking and long-term commitment that most leaders lack, but the results are transformational. Modern businesses can apply this anti-fragility principle by using crises as opportunities to eliminate inefficiencies, develop new capabilities, and create more resilient business models. The companies that emerge strongest from economic downturns are typically those that use the crisis period to make fundamental improvements that wouldn't have been possible during normal times. The revenue diversification strategies that Marcus implemented during the crisis provide a perfect example of anti-fragile thinking. Instead of just trying to preserve existing revenue streams, Marcus developed new sources of income that were less vulnerable to the types of disruptions the empire was experiencing. These new revenue streams included increased taxation on luxury goods that were less affected by the plague, development of new trade routes that bypassed war zones, and creation of new industries that served the changed needs of the crisis period. By the time the crisis ended, the empire had a more diversified and resilient economic base than it had possessed before the crisis began. Building cash reserves and financial flexibility during good times is another crucial element of anti-fragile business design. Marcus had inherited an empire with substantial financial reserves, and he had continued to build these reserves during the peaceful and prosperous early years of his reign. When the crisis hit, these reserves enabled the empire to continue investing in strategic priorities, while competitors were forced to cut essential activities. The financial flexibility that comes from maintaining reserves enables organizations to take advantage of crisis opportunities that are unavailable to cash-strapped competitors. This might include acquiring distressed assets at below-market prices, hiring talented people who have been laid off by struggling competitors, or investing in new technologies and capabilities while others are cutting research and development. Developing crisis response systems before you need them is perhaps the most important element of anti-fragile business design. Marcus had spent years developing the administrative and military systems that enabled the empire to respond effectively to the crisis. These systems didn't just help the empire survive the crisis. They enabled it to adapt and improve during the crisis. Modern businesses can develop similar crisis response capabilities by creating contingency plans for various scenarios, building redundancy into critical systems, developing cross-training programs that enable employees to perform multiple functions, and establishing relationships with suppliers and partners who can provide support during difficult periods. The final piece that ties it all together is understanding that the greatest wealth-building opportunities are created during the recovery phase that follows every crisis. Marcus positioned the empire to capitalize on these post-crisis opportunities by maintaining capabilities, building relationships, and developing new competitive advantages during the crisis period. When the Antonine Plague finally ended and the Marcomannic Wars were concluded, the Roman Empire was positioned to expand into territories that had been weakened by the same crises that had strengthened Rome. The military capabilities developed during the wars enabled new conquests. The administrative improvements implemented during the crisis enabled more effective governance of expanded territories. The economic diversification achieved during the plague enabled the empire to fund rapid expansion. The wealth explosion that followed the crisis was directly attributable to the strategic decisions Marcus had made during the darkest periods. The empire that emerged from the crisis was not just restored to its previous strength, it was fundamentally more capable and positioned for unprecedented growth. Modern entrepreneurs who understand this pattern can position themselves to benefit from similar post-crisis opportunities. The key is maintaining long-term perspective during the crisis and making strategic investments that will pay off during the recovery. This requires patience, courage, and the financial resources to invest when others are cutting back, but the rewards can be extraordinary. Market consolidation is one of the most predictable post-crisis opportunities. Weak competitors are eliminated during crises, creating market share opportunities for surviving organizations. Marcus used the crisis to eliminate or absorb competitors who couldn't adapt to the new conditions, emerging with a larger share of available markets. The competitive advantages developed during crises often become permanent features of the post-crisis landscape. The military innovations, administrative improvements, and economic adaptations that Marcus implemented during the crisis continued to provide advantages long after the immediate crisis had passed. These advantages enabled the empire to maintain its dominant position and continue growing for centuries. Building generational wealth through crisis navigation requires understanding that the greatest fortunes are built by leaders who can see opportunities where others see only threats. Marcus didn't just preserve the Roman Empire during its greatest crisis. He used the crisis to create the foundation for centuries of continued dominance and prosperity. The principles and strategies that Marcus used during the Antonine Plague and Marcomannic Wars are directly applicable to modern business crises. Whether you're facing a recession, industry disruption, competitive threats, or global pandemics, the same fundamental approaches that enabled Marcus to turn crisis into opportunity can work for your business. The key is developing the psychological resilience, strategic thinking, and long-term perspective that enable you to see crises as opportunities rather than just threats. This requires training your mind to think like Marcus Aurelius, to maintain clarity under pressure, to focus on controllable factors, and to make decisions based on long-term consequences rather than short-term fears. Let me share with you the specific quotes from Marcus Aurelius that reveal his crisis management philosophy, because understanding his exact mindset will transform how you approach any business challenge. These aren't just inspirational sayings. they're practical frameworks that guided the most successful crisis response in history. You have power over your mind, not outside events. Realize this, and you will find strength. This quote encapsulates Marcus's fundamental approach to crisis leadership. While he couldn't control the plague, the barbarian invasions, or the economic collapse, he could control his mental response to these challenges. This internal locus of control enabled him to maintain strategic clarity when others were overwhelmed by external circumstances. Modern neuroscience research validates this principle. Studies show that leaders who focus on controllable factors during crises experience lower stress levels, make better decisions, and achieve superior outcomes compared to those who become fixated on external events. The psychological technique of distinguishing between controllable and uncontrollable factors literally rewires the brain to respond more effectively to stress. The impediment to action advances action. What stands in the way becomes the way. This principle guided Marcus's approach to turning obstacles into opportunities. Instead of seeing the plague and wars as problems to be solved, he saw them as competitive advantages to be exploited. The same forces that were destroying his competitors could be used to strengthen his own position. Warren Buffett applies this exact principle when he says, "Only when the tide goes out do you discover who's been swimming naked." Buffett uses economic crises to identify and acquire undervalued assets from competitors who lack the financial strength to survive downturns. The 2008 financial crisis enabled Buffett to make some of his most profitable investments precisely because others saw only obstacles where he saw opportunities. Confine yourself to the present. This quote reveals Marcus's approach to maintaining focus during overwhelming crises. Instead of becoming paralyzed by the magnitude of the challenges facing the empire, Marcus focused on making the best possible decisions with current information. This present moment awareness prevented him from being overwhelmed by uncertainty about the future or regret about the past. Ray Dalio built Bridgewater Associates using this same principle of present moment focus during crises. Dalio's principles emphasize making decisions based on current reality rather than hopes or fears about future scenarios. This approach enabled Bridgewater to navigate multiple economic crises and become one of the world's most successful hedge funds. Accept the things to which fate binds you and love the people with whom fate associates you. This principle guided Marcus's approach to working with the resources and people available during the crisis, rather than wasting energy wishing for different circumstances. He focused on maximizing the potential of existing assets, rather than lamenting what was lost or unavailable. Jeff Bezos applied this same principle during Amazon's early years when the company faced multiple near-death experiences. Instead of complaining about limited resources or difficult market conditions, Bezos focused on building the best possible business with available resources. This acceptance of constraints actually drove innovation and efficiency that became competitive advantages. The best revenge is not to be like your enemy. In crisis terms, this means competing through superior value creation rather than trying to destroy competitors through aggressive tactics. Marcus understood that the empire's long-term success depended on building genuine, competitive advantages, not just eliminating rivals through force. Tim Cook has applied this principle at Apple by focusing on creating products so superior that customers choose them willingly, rather than trying to compete through price wars or aggressive marketing tactics. This approach has enabled Apple to maintain premium pricing and profit margins even during economic downturns. What brings no benefit to the hive brings none to the bee. This stakeholder capitalism approach guided Marcus's crisis response. He understood that the empire's long-term survival depended on creating value for all stakeholders, citizens, soldiers, administrators, and allies, not just extracting maximum short-term resources for the central government. Howard Schultz applied this principle when rebuilding Starbucks during the 2008 financial crisis. Instead of just cutting costs and laying off employees, Schultz invested in employee benefits and store improvements that strengthened the company's long-term competitive position. This stakeholder-focused approach enabled Starbucks to emerge from the crisis stronger than its competitors. Very little is needed to make a happy life. It is all within yourself, in your way of thinking. This principle enabled Marcus to maintain psychological equilibrium during the crisis by not tying his sense of success or failure to external circumstances. This internal stability was crucial for making rational decisions under extreme pressure. Naval Ravikant has built his investment philosophy around this same principle of internal scorecard versus external validation. Ravikant focuses on building businesses that align with his values and long-term vision, rather than chasing short-term market trends or external approval. This approach has enabled him to make contrarian investments that generate superior returns. The universe is change. Our life is what our thoughts make it. This quote reveals Marcus's understanding that crises are natural parts of business cycles, not aberrations to be feared. This acceptance of change as the fundamental nature of reality enabled him to adapt quickly to new conditions rather than resisting or denying them. Reed Hastings applied this principle when Netflix faced the crisis of streaming technology disrupting its DVD business model. Instead of trying to preserve the existing business, Hastings embraced the change and cannibalized Netflix's own DVD revenues to build the streaming platform that now dominates the industry. When you wake up in the morning, tell yourself, the people I deal with today will be meddling, ungrateful, arrogant, dishonest, jealous, and surly. This quote reveals Marcus's realistic approach to stakeholder management during crises. He prepared mentally for difficult interactions while maintaining empathy and strategic perspective. This psychological preparation enabled Marcus to work effectively with allies and subordinates who were stressed, frightened, or acting irrationally due to crisis pressures. Instead of being surprised or frustrated by human weaknesses, he planned for them and developed strategies to work around them. Loss is nothing else but change, and change is nature's delight. This principle enabled Marcus to reframe the massive losses caused by the plague and wars as opportunities for renewal and improvement. Instead of mourning what was lost, he focused on building something better from the remaining resources. Now let's examine how modern billionaires and successful entrepreneurs have applied these same crisis management principles to build extraordinary wealth during economic downturns. Understanding these contemporary applications will show you exactly how to implement Marcus's strategies in today's business environment. Warren Buffett's approach to the 2008 financial crisis provides a perfect example of Marcus Aurelius's crisis playbook in action. When banks were failing and credit markets were frozen, most investors were paralyzed by fear and uncertainty. Buffett saw the crisis as the buying opportunity of a lifetime and deployed billions of dollars to acquire stakes in fundamentally strong companies at deeply discounted prices. Buffett's investment in Goldman Sachs during the height of the crisis exemplifies Marcus's principle of investing in opportunities when others are selling. Buffett negotiated a deal that gave Berkshire Hathaway preferred shares paying 10% annual dividends plus warrants to buy common stock at favorable prices. This investment generated billions in profits as Goldman Sachs recovered and thrived in the post-crisis environment. The key insight from Buffett's crisis strategy is that the greatest investment opportunities occur when fear and uncertainty are at their peak. While others were focused on preserving capital and avoiding losses, Buffett was deploying capital to acquire assets that would generate superior returns for decades. This contrarian approach requires the psychological strength and long-term perspective that Marcus developed through Stoic philosophy. Jeff Bezos' expansion of Amazon during multiple economic downturns demonstrates how to use crises to build market share and competitive advantages. During the dot-com crash of 2000 to 2002, when most internet companies were failing and investors were fleeing technology stocks, Bezos continued investing in Amazon's infrastructure and capabilities. While competitors were cutting costs and reducing their ambitions, Bezos was building the fulfillment centers, technology systems, and logistics capabilities that would enable Amazon to dominate e-commerce for the next 2 decades. The investments he made during the crisis period, when capital was scarce and expensive, created competitive advantages that became virtually insurmountable. Bezos applied Marcus's principle of preserving core assets while eliminating non-essentials. Amazon cut unprofitable product lines and reduced marketing expenses, but continued investing in the fundamental capabilities that would drive long-term growth. This strategic focus enabled Amazon to emerge from the crisis with a stronger competitive position than it had possessed before the downturn. Ray Dalio's management of Bridgewater Associates during the 2008 financial crisis demonstrates how systematic crisis preparation can create extraordinary opportunities. Dalio had spent years developing what he calls principles, systematic frameworks for decision-making that enable effective responses to various scenarios. When the financial crisis hit, Bridgewater was prepared with strategies for navigating market volatility, economic uncertainty, and credit disruptions. While other hedge funds were suffering massive losses, Bridgewater generated positive returns by correctly anticipating how the crisis would unfold and positioning the fund to benefit from market dislocations. Dalio's approach exemplifies Marcus's emphasis on systematic preparation and principled decision-making. The crisis response capabilities that enabled Bridgewater's success were developed during calm periods, not improvised during the crisis itself. This preparation enabled Dalio to maintain strategic clarity and make profitable decisions while competitors were overwhelmed by uncertainty. Howard Schultz's rebuilding of Starbucks during the 2008 financial crisis provides an excellent example of using crises to strengthen organizational culture and competitive positioning. When Schultz returned as CEO in 2008, Starbucks was struggling with declining sales, store closures, and employee morale problems. Instead of just cutting costs and waiting for the economy to recover, Schultz used the crisis as an opportunity to refocus the company on its core values and customer experience. He closed underperforming stores, retrained employees, and invested in store improvements that enhanced the Starbucks brand experience. Schultz applied Marcus's principle of strengthening relationships during difficult times. He maintained employee benefits and invested in training programs even when the company was struggling financially. This investment in human capital created employee loyalty and customer satisfaction that drove superior performance when economic conditions improved. The results were remarkable. Starbucks emerged from the crisis with a stronger brand, more efficient operations, and higher customer loyalty than it had possessed before the downturn. The company's stock price increased more than tenfold in the decade following the crisis, creating enormous wealth for shareholders who understood the long-term value of Schultz's crisis strategy. Elon Musk's management of Tesla during the production crisis of 2018 demonstrates how to apply Marcus's crisis principles to operational challenges. When Tesla was struggling to meet production targets for the Model 3 and facing potential bankruptcy, Musk applied systematic crisis management to turn the situation around. Musk focused on the controllable factors, production processes, quality systems, and employee motivation, rather than becoming overwhelmed by external criticism and financial pressure. He implemented Marcus's principle of eliminating non-essentials by streamlining production processes and reducing complexity in manufacturing systems. The crisis forced Tesla to develop manufacturing capabilities and operational efficiencies that became competitive advantages in the electric vehicle market. The company emerged from the production crisis with the ability to manufacture vehicles at scale and profitability, enabling rapid expansion and market dominance. But here's the mistake that destroys most entrepreneurs during crises. They focus on surviving the immediate challenge rather than building capabilities for long-term success. Marcus understood that crises are temporary, but the capabilities you develop during crises can provide competitive advantages for decades. The advanced strategy that separates the wealthy from the poor during crises is understanding how to build what Nassim Taleb calls anti-fragile businesses, organizations that become stronger from stress rather than just surviving it. Marcus intuitively understood this concept and designed the empire's crisis response to create anti-fragile characteristics. Anti-fragility goes beyond resilience or robustness. Resilient systems can withstand stress without breaking. Robust systems can function effectively despite stress, but anti-fragile systems actually improve their performance when subjected to stress and volatility. Marcus created anti-fragile characteristics in the Roman Empire by using the crisis to eliminate weaknesses, develop new capabilities, and create more efficient systems. The military reforms implemented during the Marcomannic Wars created a more professional and effective army. The administrative changes made during the plague improved the empire's ability to respond to future challenges. Modern businesses can create anti-fragile characteristics by using crises to eliminate inefficiencies, develop new capabilities, and create more resilient business models. This requires viewing crises as opportunities for fundamental improvement rather than just obstacles to be overcome. Revenue diversification is one of the most important elements of anti-fragile business design. Marcus used the crisis to develop new sources of imperial revenue that were less vulnerable to the types of disruptions the empire was experiencing. These included increased taxation on luxury goods, development of new trade routes, and creation of new industries. Modern businesses can apply this same principle by using crises to develop multiple revenue streams that are not correlated with each other. This might include expanding into new markets, developing new products or services, or creating recurring revenue models that provide stability during volatile periods. Building cash reserves and financial flexibility during good times is crucial for anti-fragile business design. Marcus inherited an empire with substantial financial reserves, and he continued building these reserves during peaceful periods. When the crisis hit, these reserves enabled strategic investments, while competitors were forced to cut essential activities. The financial flexibility that comes from maintaining reserves enables businesses to take advantage of crisis opportunities that are unavailable to cash-strapped competitors. This might include acquiring distressed assets, hiring talented people from struggling competitors, or investing in new technologies while others are cutting research and development. Developing crisis response systems before you need them is perhaps the most important element of anti-fragile business design. Marcus had spent years developing the administrative and military systems that enabled effective crisis response. These systems didn't just help survive the crisis. They enabled adaptation and improvement during the crisis. Modern businesses can develop similar capabilities by creating contingency plans for various scenarios, building redundancy into critical systems, developing cross-training programs, and establishing relationships with suppliers and partners who can provide support during difficult periods. The psychological preparation that Marcus developed through daily Stoic practice was perhaps his greatest competitive advantage during the crisis. The mental disciplines he had cultivated enabled him to maintain strategic clarity and emotional equilibrium when others were overwhelmed by stress and uncertainty. Modern entrepreneurs can develop similar psychological capabilities through regular practice of stress management techniques, philosophical reflection, and scenario planning. The goal is to develop the mental toughness and clarity that enable effective decision-making under extreme pressure. But the most powerful technique is still coming, and this is what enabled Marcus to transform the greatest crisis in Roman history into the foundation for centuries of continued dominance and prosperity. The secret is understanding that the greatest wealth-building opportunities are created during the recovery phase that follows every crisis. Marcus positioned the empire to capitalize on post-crisis opportunities by maintaining capabilities, building relationships, and developing new competitive advantages during the crisis period. When the Antonine Plague ended and the Marcomannic Wars were concluded, Rome was positioned to expand into territories that had been weakened by the same crises that had strengthened the empire. The wealth explosion that followed the crisis was directly attributable to the strategic decisions Marcus made during the darkest periods. The empire that emerged was not just restored to previous strength, it was fundamentally more capable and positioned for unprecedented growth. Market consolidation is one of the most predictable post-crisis opportunities. Weak competitors are eliminated during crises, creating market share opportunities for surviving organizations. Marcus used the crisis to eliminate or absorb competitors who couldn't adapt to new conditions, emerging with larger market share. The competitive advantages developed during crises often become permanent features of the post-crisis landscape. The innovations, improvements, and adaptations that Marcus implemented continued to provide advantages long after the immediate crisis had passed. These advantages enabled the empire to maintain dominance and continue growing for centuries. Building generational wealth through crisis navigation requires understanding that the greatest fortunes are built by leaders who can see opportunities where others see only threats. Marcus didn't just preserve the Roman Empire. He used the crisis to create the foundation for centuries of continued prosperity. The final piece that ties it all together is understanding that crisis management is ultimately about character development. The leaders who thrive during crises are those who have developed the psychological strength, strategic thinking, and long-term perspective that enable them to see opportunities where others see only threats. Marcus's success during the greatest crisis in Roman history was built on decades of philosophical training and character development that enabled him to respond effectively when the crisis arrived. The daily practices and mental disciplines he had cultivated gave him the psychological advantages that made the difference between survival and transformation. Modern entrepreneurs can develop these same capabilities through systematic practice of the mental disciplines that Marcus used. This includes daily reflection, stress management techniques, scenario planning, and philosophical study that builds the psychological foundation for effective crisis leadership. Let me give you the complete step-by-step implementation guide for applying Marcus Aurelius's crisis management framework to your own business challenges. These 25 practical steps will transform how you prepare for, navigate through, and emerge stronger from any crisis situation. Step 1. Develop your crisis detection systems using Marcus's principle of present moment awareness. Create systematic processes for monitoring key indicators that signal potential crises before they become critical. This includes financial metrics, market conditions, competitive dynamics, and internal operational indicators. Marcus maintained extensive intelligence networks throughout the empire that provided early warning of potential problems. Modern businesses can create similar early warning systems through data analytics, market research, customer feedback systems, and competitive intelligence gathering. Step 2. Build your financial reserves using Marcus's principle of preparing during good times. Establish cash reserves that can sustain your business for at least 6 months without revenue. This financial cushion provides the flexibility to make strategic decisions during crises, rather than being forced into reactive survival mode. The specific amount of reserves needed depends on your business model, but the principle is universal. Maintain enough liquidity to survive temporary disruptions while investing in opportunities that crises create. Marcus inherited substantial imperial reserves and continued building them during peaceful periods. Step 3. Create your crisis response team using Roman military organizational principles. Identify the key people who will be responsible for different aspects of crisis management: operations, finance, communications, strategic planning, and stakeholder relations. Train this team in advance and conduct regular crisis simulation exercises. The Roman military success was built on clear command structures, defined roles, and systematic training that enabled effective responses under pressure. Modern businesses can apply these same organizational principles to crisis management. Step 4. Develop your communication protocols using Roman Postal Service principles. Establish clear procedures for internal and external communication during crises. This includes decision-making authority, information flow, stakeholder updates, and public relations management. Effective communication during crises requires preparation, not improvisation. Marcus's success was partly due to the sophisticated communication systems that enabled coordination across the empire during the crisis period. Step 5. Implement your scenario planning process using Marcus's principle of philosophical preparation. Develop detailed plans for various crisis scenarios that could affect your business: economic downturns, competitive threats, operational disruptions, regulatory changes, and force majeure events. The goal isn't to predict exactly what will happen, but to develop the mental frameworks and response capabilities that enable effective adaptation to various scenarios. Marcus's philosophical training prepared him mentally for the types of challenges he would face as emperor. Step 6. Build your operational redundancy using Roman engineering principles. Create backup systems for critical business functions so that temporary disruptions don't create permanent damage. This includes supply chain alternatives, technology backups, and cross-trained personnel. Roman infrastructure was designed with redundancy that enabled continued operation even when parts of the system were damaged or disrupted. Modern businesses can apply these same principles to create resilient operational systems. Step 7. Establish your strategic partnerships using Roman diplomatic principles. Develop relationships with suppliers, customers, investors, and other stakeholders who can provide support during difficult periods. These relationships should be built on mutual value creation, not just transactional exchanges. Marcus's success during the crisis was partly due to the strong alliances he had built with provincial governors, military commanders, and allied kingdoms. These relationships provided crucial support when the empire faced existential threats. Step 8. Create your competitive intelligence systems using Roman military intelligence principles. Develop systematic processes for understanding how competitors are likely to respond to various crisis scenarios. This intelligence enables you to position your business to benefit from competitors' predictable mistakes. Understanding competitor psychology and likely responses enables strategic positioning that creates competitive advantages during crises. Marcus used his understanding of barbarian tribal dynamics to develop effective military and diplomatic strategies. Step 9. Implement your cost structure analysis using Marcus's principle of distinguishing essentials from non-essentials. Identify which expenses are truly necessary for core business operations and which can be eliminated during crises without permanent damage to competitive position. This analysis should be done during calm periods, not during the crisis itself. Marcus had a clear understanding of which imperial functions were essential and which could be temporarily suspended during emergencies. Step 10. Develop your revenue diversification strategy using Marcus's principle of multiple income streams. Create business models that generate revenue from multiple sources that are not highly correlated with each other. This reduces vulnerability to disruptions in any single revenue stream. Marcus used the crisis to develop new sources of imperial revenue that were less vulnerable to plague and war disruptions. Modern businesses can apply similar diversification strategies to create more resilient revenue models. Step 11. Build your talent retention systems using Roman human resources principles. Develop compensation, benefits, and career development programs that maintain employee loyalty during difficult periods. Talented people are your most valuable assets during crises. The Roman system created strong incentives for capable people to remain loyal to the empire even during challenging periods. Modern businesses can create similar loyalty through investment in employee development and fair treatment during crises. Step 12. Create your customer relationship management systems using Roman citizen services principles. Develop systematic approaches to maintaining customer loyalty and satisfaction during crises when service levels might be temporarily reduced. Marcus understood that citizen loyalty was crucial for imperial survival during crises. He invested in maintaining public services and citizen satisfaction even when resources were constrained. Modern businesses can apply similar principles to customer relationship management. Step 13. Implement your supply chain risk management using Roman logistics principles. Identify potential vulnerabilities in your supply chain and develop alternative sources for critical inputs. Build relationships with multiple suppliers and create inventory buffers for essential materials. Roman supply chains were designed with redundancy and flexibility that enabled continued operation even when primary routes were disrupted. Modern businesses can apply these same principles to create resilient supply chain systems. Step 14. Develop your technology and infrastructure resilience using Roman engineering principles. Ensure that your critical technology systems can continue operating during various disruption scenarios. This includes cybersecurity, data backup, and alternative communication systems. Roman infrastructure was built to last and function effectively even under adverse conditions. Modern businesses need similar resilience in their technology and infrastructure systems. Step 15. Create your legal and regulatory compliance systems using Roman law principles. Ensure that your business can continue operating within legal and regulatory requirements, even during crisis conditions when normal procedures might be disrupted. Marcus maintained the rule of law throughout the empire, even during the crisis period. This legal stability was crucial for maintaining business confidence and economic activity. Modern businesses need similar legal and regulatory resilience. Step 16. Implement your performance measurement systems using Roman administrative principles. Develop metrics and reporting systems that enable you to monitor business performance and make informed decisions during crises, when normal information sources might be disrupted. Roman administrators maintained detailed records and systematic reporting even during crisis periods. This information enabled informed decision-making and effective resource allocation. Modern businesses need similar performance measurement capabilities. Step 17. Build your innovation and adaptation capabilities using Marcus's principle of continuous improvement. Develop systematic processes for identifying new opportunities and adapting business models to changing conditions during crises. Marcus used the crisis period to implement military, administrative, and economic innovations that strengthened the empire. Modern businesses can use crises as opportunities for fundamental improvements and innovations. Step 18. Create your stakeholder management systems using Roman political principles. Develop systematic approaches to managing relationships with investors, employees, customers, suppliers, regulators, and communities during crisis periods when interests might conflict. Marcus's success was partly due to his ability to balance competing stakeholder interests and maintain broad support for imperial policies. Modern business leaders need similar stakeholder management capabilities. Step 19. Develop your crisis communication strategies using Roman propaganda principles. Create systematic approaches to managing public perception and maintaining confidence during crisis periods when negative information might be widespread. Roman leaders understood the importance of controlling narrative and maintaining public confidence during difficult periods. Modern businesses need similar communication strategies to manage reputation and stakeholder confidence during crises. Step 20. Implement your recovery planning systems using Marcus's principle of preparing for post-crisis opportunities. Develop detailed plans for how your business will capitalize on opportunities that emerge during the recovery phase following crises. Marcus positioned the empire to benefit from post-crisis opportunities by maintaining capabilities and building competitive advantages during the crisis period. Modern businesses can apply similar recovery planning strategies. Step 21. Build your psychological resilience using Stoic mental training principles. Develop daily practices that build the mental toughness and emotional regulation capabilities necessary for effective leadership during high-stress periods. Marcus's philosophical training was perhaps his greatest competitive advantage during the crisis. Modern entrepreneurs can develop similar psychological capabilities through systematic mental training and philosophical study. Step 22. Create your decision-making frameworks using Marcus's principle of systematic analysis. Develop clear processes for making important decisions during crises when information might be incomplete and time might be limited. Marcus relied on systematic decision-making frameworks based on Stoic principles that enabled effective choices under pressure. Modern business leaders can develop similar decision-making capabilities through training and practice. Step 23. Develop your leadership development systems using Roman succession planning principles. Identify and train potential successors who can lead effectively during crisis periods. This ensures business continuity even if key leaders are unavailable. Roman succession planning ensured that capable leaders were available to manage the empire during transitions and crises. Modern businesses need similar leadership development and succession planning capabilities. Step 24. Implement your organizational learning systems using Marcus's principle of continuous improvement. Create systematic processes for capturing lessons learned during crises and incorporating these insights into improved crisis response capabilities. Marcus used each challenge as an opportunity to improve imperial systems and capabilities. Modern businesses can create similar organizational learning systems that enable continuous improvement in crisis response. Step 25. Build your legacy and impact systems using Marcus's principle of long-term thinking. Develop business models and organizational capabilities that create lasting value and positive impact beyond immediate crisis survival. Marcus focused on building systems and institutions that would benefit the empire for generations, not just solving immediate problems. Modern entrepreneurs can apply similar long-term thinking to create businesses that generate lasting wealth and positive impact. The neuroscience research that validates Marcus Aurelius's approach to crisis management provides fascinating insights into why these ancient principles are so effective for modern business leaders. Understanding the brain science behind crisis leadership will help you implement these strategies more effectively. Studies using functional magnetic resonance imaging show that chronic stress literally shrinks the prefrontal cortex, the brain region responsible for executive function, strategic thinking, and emotional regulation. This explains why most leaders make poor decisions during crises. Their brains are physiologically impaired by stress hormones. However, research also shows that specific mental practices can counteract these negative effects and actually improve brain function under stress. The meditation and philosophical reflection practices that Marcus used daily have been shown to increase prefrontal cortex activity and improve cognitive performance under pressure. Studies of mindfulness meditation, which is essentially a modern version of Stoic mental exercises, show increased gray matter density in brain regions associated with learning, memory, and emotional regulation. Participants who practice mindfulness regularly show better decision-making capabilities and lower stress responses during challenging situations. Research on cognitive behavioral therapy, which is based on principles that Marcus wrote about in his meditations, demonstrates that changing thought patterns can literally rewire the brain to improve emotional resilience and performance. The cognitive techniques that Marcus used to maintain psychological equilibrium during the crisis are now validated by modern neuroscience. Studies of successful leaders across various industries consistently show that the most effective crisis leaders combine technical competence with emotional intelligence, long-term thinking, and strong ethical principles. These are exactly the capabilities that Marcus developed through his philosophical practice and applied during the greatest crisis in Roman history. The psychological research on what motivates high performance during crises also validates Marcus's approach to leadership and organizational culture. Studies show that people perform best under stress when they feel their work has meaning, when they have autonomy to make decisions, and when they trust their leaders to make fair and rational choices. These findings explain why Marcus's stakeholder-focused approach to crisis management was so effective. By creating genuine value for all stakeholders and maintaining ethical leadership principles, Marcus inspired the loyalty and commitment necessary for effective crisis response. Modern research on organizational resilience demonstrates that companies with strong values-based cultures recover faster from crises and achieve better long-term outcomes than those focused solely on short-term financial performance. This validates Marcus's understanding that character and culture are the ultimate sources of sustainable success. The economic research on wealth creation during crises also supports Marcus's approach to crisis management. Studies of companies that have survived and thrived through multiple economic cycles show that they share certain characteristics: focus on long-term value creation, investment in capabilities during downturns, and leadership that maintains strategic perspective during difficult periods. These findings confirm that the principles Marcus used to manage the Roman Empire during its greatest crisis are not just historically interesting, they're scientifically validated approaches to creating sustainable business success during any challenging period. But the most powerful technique is still coming. And this is what separates leaders who build lasting wealth from those who merely survive difficult periods. The secret is understanding that crisis management is ultimately about character development and psychological mastery. The leaders who thrive during crises are those who have developed what psychologists call post-traumatic growth, the ability to emerge from challenging experiences stronger, wiser, and more capable than before. This requires a fundamental shift in mindset, from seeing crises as threats to be survived to seeing them as opportunities for development and improvement. Marcus exemplified this approach to crisis as character development. He used the challenges of the Antonine Plague and Marcomannic Wars as opportunities to develop his leadership capabilities, strengthen his philosophical understanding, and build the mental toughness that enabled even greater achievements. Modern entrepreneurs can develop this same approach to crisis as opportunity by viewing challenges as training experiences that build the capabilities necessary for long-term success. This requires maintaining long-term perspective during difficult periods and focusing on the growth and learning opportunities that crises provide. The transformation of your crisis management thinking starts with understanding that the challenges you face as an entrepreneur are fundamentally similar to the challenges that Marcus faced as the leader of a global organization. The scale may be different, the technology has changed, but the core requirements for success remain constant: clear thinking, systematic preparation, strong relationships, and principled leadership. The opportunity in front of you is to apply these proven principles to your specific business situation. Whether you're facing economic uncertainty, competitive threats, operational challenges, or industry disruption, Marcus's crisis management framework provides a blueprint that has been tested under the most challenging conditions imaginable. The key is to start with the foundation, your own character and capabilities as a leader, and build systematically from there. Develop the mental disciplines that enable clear thinking under pressure. Create the systems and processes that enable effective crisis response. Build the relationships and culture that provide support during difficult periods. Remember that crisis management is not about avoiding all challenges or eliminating all risks. It's about building the capabilities and resilience that enable you to turn inevitable challenges into competitive advantages and wealth-building opportunities. The Roman Empire's approach to crisis management succeeded for over a millennium because it was based on timeless principles of systematic preparation, principled leadership, and long-term thinking. These same principles can work for your business if you have the wisdom to apply them and the courage to commit to them for the long term. The choice is yours, but the blueprint is proven. Marcus Aurelius transformed the greatest crisis in Roman history into the foundation for centuries of continued prosperity by applying systematic crisis management principles that are just as relevant today as they were 2,000 years ago. This is your invitation to join the ranks of leaders who understand that true wealth comes not from avoiding challenges, but from developing the capabilities to turn challenges into opportunities. Marcus's Crisis Management Playbook provides the framework. Your character and commitment will determine whether you have the wisdom and courage to apply it. The journey of crisis-proof wealth building starts with a single decision. The decision to think and act like Marcus Aurelius, to prepare systematically during good times, to respond strategically during difficult times, to emerge stronger from every challenge you face. The time to start preparing for the next crisis is now, during periods of relative stability and prosperity. The leaders who thrive during crises are those who have developed the capabilities, resources, and mindset necessary for crisis leadership before they need them. Marcus's success during the greatest crisis in Roman history was built on decades of preparation and philosophical training that enabled him to respond effectively when the crisis arrived. If you found this deep dive into Marcus Aurelius's Crisis Management Playbook valuable, make sure to subscribe to this channel for more ancient wisdom that can transform your modern wealth building. In our next masterclass, we'll explore the psychological foundations of Stoic entrepreneurship and how Marcus developed the mental toughness that enabled him to lead effectively under extreme pressure. You'll discover the daily practices and philosophical frameworks that can give you the same psychological advantages that made Marcus one of history's greatest leaders. Hit that notification bell so you don't miss it, and I'll see you in the next episode soon.